Ladies and gentlemen, welcome on board. On today's menu of your program, Decryptage, we will discuss the role of Africa's multilateral financial institutions and their agenda, including accelerating the industrialization of the continent, developing strategic trade infrastructure, and increasing value-added trade within Africa and the rest of the world. To dissect these, we welcome Mr. Haytham El Maayergi, Executive Vice President at Global Trade Bank, Afreximbank. Mr. Haytham, thank you for accepting our invitation. Since your appointment on November 9th, 2023, how far have you cut through the roadmap on developing a broad range of global trade banking products, including trade finance, syndications, and advisory and capital market services?
Okay, thank you for having me. It's been a very active year for us. Afreximbank originally had the full menu of trade finance products that really can support investment and trade into Africa and within Africa. And what we've done the last year is to implement more and more this power to help more of interested parties as they grow into Africa. So, for example, as you said, in the area of syndication, we launched what we call Africa Trade Risk Exchange Desk (TREX), which is basically allowing the continents to trade risk between them. So people who are full on some countries or people who want to trade debt instruments, we can become the exchange to buy and sell debt instrument, which will help a lot the trade because a lot of banks get congested with their lines and they stop supporting, and they need a bank like us who will start to buy and sell from them to open more limits and they can support the trade. We looked at our area for trade finance. We have our famous facility, Aftraf. We expanded dramatically in this facility. We now touch 250 banks covering almost all countries in Africa, which is basically a facility to help banks in Africa issue LCs. The LCs could get confirmed, and in time when they are not having the right support from the international community to develop those LCs, send them, and they need a bank to give them their confirmation and so on. We are now really open the spread of our support to 250 banks, which is a record number for us. And we're looking at in 2 years, we do 500 banks, covering almost most of the banks of Africa. And we have other areas, an advisory and capital market, who started to expand on the debt and capital market. We started to expand also in the M&A, and we've been doing a number of transactions in the M&A scene within Africa, which is very critical for us. We started also to grow our repack facilities, supporting people to repack their risk and sell it to the international investors. And to top it all, we really changed the way we are looking at the digital offering, where we augmented all our digital offerings like Mansa and ethics and the whole offering into one consolidated platform for traders from A to Z to find financing, show their products, verify counterparts, and even do payments together with PAP's local payments within. So very active year for us on the global trade side, and we're looking forward to do more and more into aggregating this to support the flow into Africa, whether investment or trade.
Most experts till date acknowledge that for African countries to be able to capture more trade opportunities, they need to diversify their products. What plan can be enacted by Afreximbank to boost global trade in Africa?
So let me take this even further. Diversification, not only by diversifying just the product, but actually diversifying their position on the value chain of each product. Let me explain. So, for example, we've been very active into telling countries who export in cotton, and this is a practical case that happened. How can we take you up the value chain to export clothes and export garments? And we have a lot of countries where we successfully did this. And we did this through what we call our industrial zones that we're creating, and also bringing international funding. So this is cotton example. For example, we put Swiss experience and Swiss funding together with our capabilities of risk taking, and we put together a facility for them into really getting their value chain up. And we've done it a lot in wood now. We're going to countries that export wood. We tell them go to furniture, and or seeds go to oil. So this is happening while at the same time we're helping diversification by trying to remove the hurdle. Like now we're building for them this industrial zone that we talked about. the quality center, and the whole thing. And also, we're supporting countries to start new projects and new products by our facilities. Like we do a major project finance facilities for them on areas and industries that we see fit. So a lot of work has been done now in the area of let us support you getting up to the value chain, but also let's support to opening new fields for you. And between our industrialization programs that we got very specific program for different industries to our support directly through industrial zones or quality zones or through going up the value chain with them. It's and the other thing is to open access for them to export and find markets. And this is what we're doing on our digital platforms where they can put their products and get exposed to all African markets. And with this exposure, they will start to understand that they can invest now in new products to diversify because they can find a market for it. So a very comprehensive program that we're putting now for the different countries.
Many African countries have over the years experienced an unprecedented growth rate, partly linked to a commodity boom and partly due to sound economic governance. Nevertheless, there has been a subdued industrial supply response to several years of macroeconomic stability. This is ascribed largely to the number of supply-side constraints, such as the lack of required industrial capacities and capabilities. What tools are being currently used to cover these loopholes?
It's very positive. And actually, it's not because they see it's not ideas anymore. It's actually practical. Like if you see it, Gabon and other places, they're actually the industrial zones are active there. The exports started to go to cotton, from cotton. So all what we've done is now being felt touch on the ground and actually expanding to more 9 and more now in the zone across other countries, because when they see their fellow countries happy, excited with what's happening, they do this. We do a lot of project finance activities, and actually we do a lot of project preparation activities because a lot of them will have the idea, but they know how to make it bankable. So they would love to diversify. They have a great idea. They know that the country has this resource. How can we take it further? But we now actually support them even to prepare the facilities, to prepare the case and make it bankable, acceptable by banks. And not only this, but because with our standing within African market, we encourage other institutions to come with us through syndication. So not only us supporting, but because we're there with them, we are bringing more partners to heavy lift with us.
Financing industrialization in Africa calls for pragmatic and feasible ways that interrogate past financing strategies for Africa industrialization. Through your global banking system, how can you better finance industrialization motions, and what are the challenges faced?
I'll tell you. Let me start by the challenges to understand why we're doing what we're doing. So let's imagine when they start to move the goods between them, and we touch them on the other side. You have the issue of the movement of goods, logistically speaking, very difficult. Well, they would rather have exchange from someone outside Africa across sea. It's easy, it's clear. They know how to contract it, rather than crossing the border in between countries within Africa. So logistical challenge. But not only logistical challenges, regulation challenges is beyond belief, because every country have their own regulation as they deal with each other, and the unclarity that we have here actually prevent them from dealing big time with each other. The infrastructure is not there, big time. And then the other thing is you have a lot of issues that we did not expect, like even harmonizing the codes of the goods that they exchange together. What do you mean by cash or not in one country? Maybe another country look at it differently. Is it with shell, without shell? Where are the codes that really can automate the trade that all other countries are doing? And that's why what we're doing is a lot of work. Like together with the AFC, FTA, we're doing this unification of code. We are trying to do this cross-border guarantees. So this cross-border guarantee will allow trucks to cross borders from Cairo to Cape one day without needing to stop and pay at every border, because one guarantee can cover them. We're doing a lot of not only finance, but how can we do allow them to find a way to know that each other and to market to each other. And let me elaborate more on the Africa Trade Gateway that we built. I insinuated to it before. So it's basically we're giving a B2G, B2B platform to all of them. And this platform allow them, every trader, to list all their goods, expose them to all Africa, support them with either finance or escrow accounts. We're trying to get all the informal trades in Africa into this platform so that they can get support. They can inquire about each other, KYC each other. They can get information about the countries they're trading in, what has regulation, how can I make the best out of the free trade agreement. And above all now, which will totally change the scene, will be the PAP's integration into this. Because let's imagine now we can get countries in Africa, actually, instead of sourcing foreign currency to import from their neighboring country, they now can use their own local currency to do an import transaction rather than loading their economy with a lot of pressure into sourcing FX that they don't actually need because they're buying from their neighbor country has another local currency. This will totally change the scene when it comes to these issues. So I think we had a fully comprehensive program on exchanging payments, local currencies exchange, facilitating the cross-border area, availing e-commerce platform. I think we're trying to create the perfect storm. So when they all come together, we start to get the right intra-Africa momentum and get the right global Africa access to international market into Africa.
Ladies and gentlemen, we hereby draw curtains on this program. Stay tuned for more information on Africa 24 English.